going to catch up to the Mag 7, we're obviously seeing the latter. So it's encouraging on the one hand to see some breadth expansion. We're seeing healthcare, biotech have a massive breakout today. At the same time, we haven't resolved some of the extreme upside issues on some of the tech names.
Like what? Are you talking about the mega cap tech names? Are you talking about?
Hello everyone. We are right now on the closing bell. 10 minutes to closing. And today I decide to start, not going to be doing start, but actually today, tomorrow, and the next day. For this week, I'm going to be doing the closing bell, I believe, if I can. And also, I'm going to be cover whatever is play on the earnings for the night. So, right now, the sound you have in the back, it's like the CNBC. You can put it both together right here that you guys can, and we watch CNBC right now. So for tonight, I have one of the stocks that I'm kind of playing with right now. It's First Solar. First Solar. It's got the earnings tonight. And we're going to take a look at the chart to see what I'm thinking, what my indicators show right now. And so where I'm inclined for my indicators, that's what I try to play with. Okay, so I don't know if you subscribe my channel recently. I hope it did it. Someone just did it. So always keep the notifications. That way you can receive when I'm live analyzing the stock market. So we are about to close. We're in the closing minutes. 10 minutes to close. Yeah, like I say, the one I'm looking at right now, gonna show to you guys. I'm gonna mute the CNBC and this First Solar. Let's make bigger, and let's take off all the indicators. That way you guys can see it. Not all, just those two right here. This one off. And this one, let me see, this one with the lines. Yeah, it's got the lines. Okay. And with those two. So, we got the day chart right here for First Solar. Okay. I don't know if you were able to see it, but it's very clear that even without me doing the lines, you can see the formation and the head and shoulders. Okay, it's a head and shoulder formation. Try to kind of kill the head and shoulder formation in this last candle over here, but I don't think this is gonna jump back over here. We have a big short position. And the short position, it's, as you can see it, something went wrong here, my phone. I don't know if it is going to be better this way. Let's see if I can, yeah, this is better. So, okay. It tried to kill over here and am I gonna kill? I don't know, because we have this support going on at this point over here right now, which is like this buy position. But against this short position, I don't think this is gonna survive. So also big this maybe kind of like try to bounce back, but I don't know. I would say more like a head and shoulder situation at this point. Okay, This is the day. Let's take a look on the weekly. In the weekly, very clear as a head and shoulder position on the weekly chart. Also, so what I was cover crypto. So I have this formation crypto on the. I never heard about it, but it was some type of formation that on the XRP one day when we had the big sell off from 56 all the way down to 16 cents when the Coinbase say they're gonna cancel, they're gonna stop the trading. So let me show you to you guys what I'm talking about. Why it's not working? Computer's not acting really funny. Anyway, it's formation of copper handle, inverse copper handle, which is happening over here. This should be like going down this way. I don't know why. But for sure, head and shoulder everywhere, and maybe a copper handle situation. That is nice. The battery, my keyboard just stopped working, I think. Anyway, go this way. And let's do this. And let's put here when I come back.
Can help it do that.
Well, Apple going up $25 billion in market cap because they're canceling the iCar that may never have existed anyway shows you that there's just this willingness to believe out in the market. I think that the long-term investor is comfortably involved. The core volumes in this market are actually very light in the things like the S&P 500. On the fringes, YOLO happening. 5% up in the biotech index, yields up, and the Russell 2000 microcaps up 1.5%, 2%. It shows you the speculative juices are back. Doesn't mean it's getting overdone just yet, but that's where the action is. That's the phase of the rally we're in.
I mean, the chartists, you're Jonathan Krinsky, chartists like him, they've been denied. I mean, they've been making the argument for many months that, something's got to give and something's got to break, and nothing's given and nothing's broken.
The market has answered most of the big complaints, and it hasn't left you with much except for the big, valuation conditions and seasonals and sort of the slow-moving stuff that might matter at some point. And look, if we get a big disappointment on inflation, if we're going to have to really reprice the rate path again, if yields break out, then we might have the excuse for something bigger.
Yeah, for sure. Courtney Reagan, what should we expect from eBay in just a little bit?
Scott, so eBay's underperformed both the iBuy online retail ETF and the XRT ETF over the last 3 months. So the street is expecting earnings of $1.03 on $2.51 billion of revenue. So investors, listen up. A Capital IQ analysis shows that more often than not in the last 79 quarters, whatever direction eBay shares go in response to results after market, they will move further in that same direction in the next day's trade. Now, while the holiday quarters results are going to matter here, of course, Scott, analysts really focusing on eBay's year ahead, specifically watching to see how management hits its goals of focusing on enthusiasts for many of these collectible verticals, while also expanding the market for refurbished goods. Traditionally, eBay's competition online has been Amazon, but the street is carefully watching the rise of Shein and Temu and how those names are taking share from eBay's and other online, particularly when it comes to cross-border trade. Back over to you.
All right, Court. Appreciate that very much. That's Courtney Reagan. Pippa, First Solar, what do we need to know?
Yeah, Scott. Well, First Solar has outperformed the broader sector over the last year thanks to its exposure to utility-scale solar, which has held up better than resi, as well as its advantageous position as the only sizable domestic panel manufacturer. Now, module prices have come down, but as RBC put it, First Solar is immune to current oversupplied market conditions because its backlog extends into 2027. Now, guidance here will be important because right now developers are willing to pay a premium for assured delivery. But as more production comes online in the next few years, does that start to change? Now, several factories are also under construction, so an update from First Solar on those timelines will be important, as well as commentary around how the company will use the $700 million in IRA tax credits that it sold at the end of last year. Scott?
All right, Pippa, we appreciate that. Pippa Stevens, we have about a minute to go. It's going to get loud in here, too, because we got the Oxy anniversary, the listing, got about 100 people here. I'm told many making their first trip to New York City as well, so you know they're going to be loud and proud. So let's keep that in mind.
I stand warned,
with less than a minute to go. Speaking of energy, it's been a big disappointment, right? You look at natural gas prices are unbelievable to look at, and oil is, made us believe, okay, maybe it's going to move higher a little bit, but these stocks, not too much.
No, not too much. I mean, it just doesn't seem to be where the attention span is at the moment, right? It's almost the opposite of the stuff that's working, which is the more digital, the more AI you can get, the less real asset. On the other hand, crude hangs in there, and I don't think you can write it off that this range is going to be the range forever.
Okay. So the bell's going to ring again. We see the NASDAQ does in the day ahead, but it really feels like we're looking ahead to PCE on Thursday. I'll see you tomorrow. I look very much forward to that. Have a great evening into OT with Morgan and John.
Well, the Dow's falling for a second straight day, but the other major indices are higher, especially the Russell. Look at little Russell up about 1 1/3%. Investors, meanwhile, await key inflation data later this week. That's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
Energy, the biggest drag on the market, while utilities and communication services were the best performing sectors. Now get ready for another wave of earnings. eBay, Urban Outfitters, Splunk, Klaviyo, First Solar, Devon Energy, Rocket Lab, and Boston Beer, just to name a few. Instant analysis of all the results coming up.
Plus, CEO of Klarna on the state of consumer spending, his company's new AI assistant, and that IPO might be in the offing. But first, let's get to today's action with our first guest. Joining us now is Drew Pettit, City Director of U.S. Equity Strategy. Great to have you here on set. So, in the context of today's okay moves, we're kind of at some highs. You're saying it would take a full correction in the S&P, I believe, like a 10% pullback to 4,500 to make you feel like doing anything more aggressive than buying occasional pullbacks?
Yeah, look, I just don't think you chase at this point. Look, a lot of news is getting priced. A lot of good news is getting priced in. We are actually trading up, even though reporting season really hasn't been great. We really haven't had a lot of broad beats and broad raises. So we have a lot of people just kind of adjusting estimates on the fringes and so on. So kind of through that, enjoy the ride in equities right now. Just wait for a better time if you want to be more aggressive.
Now, you say there are some themes for 2024 that you're looking for in equities: AI, digital leisure, experiential commerce, fintech among them. Which of these themes is the least stretched valuation-wise already?
Probably experiential commerce, to be honest with you, because I know we've had some better retail numbers. People feel better about the consumer in the U.S., but there really isn't a lot of expectations built in there. It's not this big growthy trade. Again, it's more of a value trade. So I think that one, and also infrastructure and fossil fuels. We do think we're underinvested there. There's some tailwinds, but again, it's the value, it's the cyclical side of the trade. We think there's a lot more leverage there in those plays as the market rally kind of broadens out.
Interesting. I just want to go back to what you had to say about the market and stocks in general trading up. Why do you think that's been the case, even though earnings maybe hasn't been that fabulous? And given the fact that you have a market that's pricing in just under 80 basis points of easing now for 2024, which is half of what was expected to start the year.
Yeah, so it's the beats. So I understand we don't really have the raises to go with it like we've seen in some other quarters. But with rates a little bit higher, the cure-all for now has been to really like pull forward some cash flows. Maybe pull forward's not really the way to explain this properly, but it's just improving the near-term cash flows. So if we're thinking about just the old DCF math that we all did in school, you know, time value and money is a pain when rates go up, except if your cash flows go up too.
Okay. So when you talk about some of these cyclical trades, what does it say about where we are in this economic cycle as well? And I asked that on a day where we've had some pretty sloppy numbers. Durable goods not looking so great. I realize maybe some noise from Boeing, weak Boeing orders there. But in general, it's been a little bit of a mixed picture, at least for January, maybe in the midst of weather.
Yeah, so here's where the micro comes in. So I get there's macro headwinds, but we're thinking about the S&P 500 companies, like the big cyclicals of the world, the market leaders. We are talking a lot about AI and how it helps businesses and all these advancements and how it's really going to help you manage. But there's other tech improvements and other just general business improvements that are making cyclicals less cyclical. So even if we have a bit of a slowdown from here, I just don't think we appreciate the story and how much better corporate America's gotten through really good up cycles and, you know, some slowdown, some softness too.
So back to your experiential commerce comment, we've got eBay coming out, which is not, I guess, experiential, at least not. It hasn't been having a good experience as a stock anyway. Where do you draw the lines in that? How much of that crosses into what we see Walmart trying to do, right, with what they're doing in digital and Vizio?
Yeah, so actually it's funny, something like e-commerce does fall into our experiential commerce. Maybe it's kind of the lack of experience when I just want to buy something now rather than, you know, wade through a store, chase my kids around, all that fun stuff. But honestly, I think experiential commerce outside of e-commerce taking share and continuing to take share and then buying experiences over things, this is where the cruises play in. So we highlight something like CCL on our recommended list. I think if we do have consumer softness, people are going to narrow into what they like to do and how they like to shop. So when we're thinking about playing the consumer, when we're playing that side of cyclicals, I think you play the structural trends there.
Okay. That sort of speaks to what we saw with Norwegian Cruise Lines today, reporting earnings and just a huge double-digit gain in that stock, to your point. Because I am looking at your list, you do name names. What are some of the other, I guess, stocks that look compelling right now at these levels?
Yeah, so it's funny. I get beat up on this one a little bit because when we're thinking about AI, we do like the idea of playing it via Meta, Amazon, Google, but not really the rest of the big seven, which might be the more obvious plays. I think these are the types of businesses that have other lines that have so much operating leverage. So they can kind of fund the product improvements over time. They're spitting out so much cash. And really, when you think about the growth expectations that are priced in there, those valuations aren't as unreasonable as people want to make them think.
Got to mention eBay, First Solar, and Agilent are all out, and we are going through them. So, Morgan, since I'm going through Agilent, I'm going to toss it back to you here. It does look like a beat on the top line, but to say more than that, I got to look closer.
Okay, so we'll let you dig through those results right now. We'll keep going with this. I'm going to circle back on Uber, because we did just see that enter the Dow Transports. Amazon just entered the Dow Industrials. How does it speak to where this economy is going? And to pick up on what you just said earlier, the role that tech is playing across so many industries, across so many sectors, AI or not?
Yeah, I think it's operating leverage. I think where the economy more broadly and where investors are going is what companies can actually turn sales into a cash flow that I can really discount. You know, we're not trading these stocks on sales multiples anymore. So like Uber, great business, good platform, got a really big sales and following. Hell, it even became a verb at this point. And now it's actually turning that into EBITDA and EPS that's growing faster than the top line. Okay, what would you be staying away from right now? What do you see as the greatest risks? So honestly, our favorite trade idea on that side is anything but defensives. So a lot of those companies really don't have a structural trend behind them to make those businesses much better. So staples becomes an area that's a bit of a risk. Like if you're under margin pressure as a consumer goods, like non-cyclical goods company, what are you going to do? Yeah, there's some stuff on the margin here and there you can do to kind of help out, but you're just you're along for the ride depending on inflation differentials.
Okay. Well, we've got those eBay earnings out. Courtney Reagan has the results. Court.
Hi there, Morgan. Yeah, so the quarter looking here pretty strong for eBay. The company reporting earnings per share adjusted of $1.07. That's better than what the street was looking for at $1.03 adjusted here. Also, guidance looks pretty good here for the first quarter. Guidance giving a range of 119 to 123. The street was looking for 113 adjusted, so that's above. First quarter revenue guidance about what the street was expecting. They're giving a range of $2.5 billion to $2.54 billion, and the street looking for $2.53 billion. So somewhat bracketing here. The company also is saying they're increasing their dividend by 2 cents and doing a $2 billion buyback. That gross merchandise volume that we talk about also up 2% to 18. Reacting up more than 3% here in the early going for eBay's fourth quarter results. Back over to you, Morgan and John.
All right. Courtney Reagan, thank you. We've got Splunk earnings out as well. Christina Partsinevelos has the numbers. Hi, Christina.
Splunk is a cybersecurity firm as well as data observability, and they posted revenues of $1.486 billion, which is a beat for Q4. We don't have EPS. We're not going to compare for the full year revenue guidance that came in $4.21 billion, which was slightly less than the street was anticipating at $4.48. I'd like to reiterate they are not providing an outlook or having an earnings call. Why? Because Cisco plans to buy them for $28 billion. That deal was started in place in September. It still needs to go through regulatory hurdles, which we should find out by March 13th, according to the EU. That was recently set a deadline. So again, Splunk beat for Q4 revenues. Guidance or full year revenue guidance was a little bit light, but stock not really reacting because there's not much in this report.
All right, Christina, thanks. Agilent earnings are out. That stock is reacting with the shares higher by about 6% in overtime. Interesting story here, though. So let me first give you the fiscal Q1 numbers. Revenue came in at $1.66 billion versus 1.588 expected. That's a beat. EPS also a beat at $1.29 versus $1.22 adjusted expected. Now Q2 revenue and EPS both a miss, but in a way that was expected because Agilent had been saying first half of the year is going to be rough. 20% of their business is in China, and that has been a drag. They said the second half is going to be better, and a better second half is reflected in their full year guide now, and I think that's why the stock is higher. But first, Q2 revenue guide is to $1.56 to $1.59 billion range. The street was looking for $1.617, so that is a miss. Also, the Q2 EPS guide is a range of $1.17 to $1.20 a share. The street was expected $1.27 adjusted, so that's a miss. But on the full year revenue guide, they're saying to expect $6.71 to $6.81 billion of revenue versus $6.74 expected, and the EPS guide is to $5.49.5 at the middle of the range versus $5.49 adjusted expected. So the strong full-year revenue guide, the street was already expecting a weaker first half from Agilent, but they're still confident in the second half, and that's got the stock higher by a little more than 5%.
All right. Drew, want to get your reaction? I mean, it's sort of like cafeteria style. Pick your name, if you will. But I guess if I just start with eBay, just the fact that they're increasing the dividend, they have a $2 billion buyback in the works. We saw Zoom, by the way, initiate a buyback last night. There's been a lot of that type of activity, and arguably more than we've seen in the past amid higher interest rates, as it's been cheaper for companies to do that to reward shareholders. Your thoughts?
Look, just thinking about not so much the stock specifically here, but thinking about the e-commerce names and these internet-driven business models. Look, there's a lot of high growth expectations, and when the companies can hit them, they're getting rewarded. This is actually a space right now that has tons of dispersion after earnings. So good example, when you can beat top line, when you can beat bottom line, and give some people a reason to raise their estimates for the full year, shares have been rewarded. On the flip side, when you see some of these companies like Wayfair on our list, mea culpa here, that you did not see the forward raise, that stock got punished on earnings.
How are you thinking about international exposure? And I'll say China exposure specifically now because Agilent had it. That affected, it seems, their fiscal second quarter guide, but their full year is looking strong. It reminds me of Medtronic, another player in the health medical equipment space, so Agilent is more test and measurement, they've got China exposure. It seems like they've been able to work through some of that because they also had a stronger report. How should investors weigh that kind of exposure that was a problem maybe in 2023? Some companies seem to be able to get beyond it so far.
Yeah, it creates easy compares. That's the kicker. So you started pricing in and talking about this a lot last year. Like, we did a lot of China work like 6 months ago. So when investors come back to that, it's, let's just dust off the old playbook here.
So, okay, we're looking at First Solar right now at the, Splunket. I know it is not a, so First Solar is 6% right now, and, eBay also 6%, something like that. So what I was doing the analysis, and I was mentioning about try to show you guys a couple things, but on the thought that I was doing this, it would be like a cup and handle, inverse cup and handle. And but when it got over here, it kind of like hit it back, and as you can see here, it might not go as far as $160, $170. Right now it's trading 151, 152, with just like a little shine above the, I don't know if this gonna kill this formation from head and shoulders, or would it be like this, and now probably like the next leg going up, back and over here. So let's see, only 4%. It's not enough on a situation that tomorrow we're gonna have like Fed minute in the PCE. You talk about First Solar right now.
Of analyst estimates, although revenue at $1.16 billion, short of the $1.32 billion that was expected, the company issued full-year EPS and revenue guidance that was largely in line with expectations, and also said that it produced and shipped a record volume of modules during the latest year, and their backlog now extends into 2027. Those shares up 4%. Morgan?
All right. Pippa Stevens, thank you. And Drew, our thanks to you for being here on set and going through earnings with us.
Thanks for having me.
Good to see you.
All right, well, it's time now to bring senior markets commentator Mike Santoli in with a look at the strong dollar and the appetite for U.S. stocks. Mike.
Yeah, Morgan, over the 1 or 2 year basis, the U.S. dollar index was kind of range bound, but longer term, you can just see how strong the U.S. currency is relative to its history here. You barely see that pullback.
So, like I was saying, on my other analysis, I was right. I think was, let me see, was a Workday. I did analysis on that one, which I kind of like read it on the stock hitting at the line over here. Let's take this off because this didn't happen. So I drew a line over here, and a pause market last night hit over here at the line, and then bounced back, opened somewhere right here, went up close to 3 or 4, and finished the day on the 295. So still correcting 4% from the, but this killed my play. I was able to get back my money on the stock. Not enough. I lost $35, but even so I lost on my short position because I closed at loss. I believe I closed, I'm not sure. And so, but kind of like I predicted this bounce over here, and people was posting on that. Like I say, I'm still believe that this First Solar, sometimes it go up, but then go down again. I don't know. Here is still not showing. Now we had the numbers in here. 4.4, 4.6. Oh, you guys are not seeing. Let's go back. First Solar. I'm checking out from here. And 2%. It'll be shine off my short position. Okay, let's delete this. Let's delete this. I was saying, you know, on the weekly, it's definitely. Let's delete this. I don't know, not professional technical analysis, but come on. Come on, babe. This is not a head and shoulder? What do I miss here? Do I miss this? Because when I got here, kind of like stop. This should have been the neck, and this last 3 weeks, this little formation here, it was the killer from the head and shoulder, I think. Formation. I don't know. I could be wrong. I'm probably wrong. And if you can see the block on here was like pretty big. Also, on the weekly, monsters block for short positions, you know, all the way up from 230 to down to 160. I mean, unless it's gonna be like a massive short squeeze, other than that, I don't see it. This price going up. If tomorrow any bad news for the economy, probably like this go down big time. We see the buy positions at 143. That's all. Kind of like, yeah, right here. On 5 minutes. Sometimes 5 minutes it's more accurate on the indication, especially in the buy. On the blocks, you know, on the 5 minutes. Okay. Probably the idea was like come in with the straddle over here at the stop on the 24th and just waiting, you know, what to make $2,000. From 160 only down over here to 143, 140, 143. Everything was good on. I think everything was good on a call. Dow Jones finish, I think on the red. Yep, Dow Jones finished red. Looks like big short positions set up over here on the top. See, I tried to predict this invert in a day chart. It hit it. Kind of like this is the Dow Jones Industrial on a day chart. Very made copy invert copy and handle from the September. I hit it down over here, which it was, let me see, %7 correction, and so then after that, which probably was like a double bottom, not quite double bottom, but going up. Let's go back First Solar. 2.5%. Pause market. I don't know what to say. The two indicators that long, more precise, I believe, maybe for long, would be this one and weekly and the day chart. This company should move big on the earnings. I don't know why it's not moving that much. Big pressure in the sell side over here. Only see a buy side in 15 minutes, 5 minutes, 3 minutes, 1 minute. It's another formation over here. Maybe, I don't know. Gotta wait for tomorrow, see how it goes. On that note, let's go back and see the eBay
secondary market, whether it is streetwear or watches. So it'll be interesting to see if they are able to share any data on some of those sectors. They really leaned into a lot of local sellers and small regional sellers like American small businesses during the pandemic. And that was really an attempt to attract the shopper that wants to support those local businesses. So there are some interesting places where they're absolutely investing. There's opportunity there for sure, but that market share number needs to go up. They're not outpacing the growth of e-commerce overall.
Okay, Sucharita, thanks for joining us with an instant analysis of those eBay results and everything else we're seeing across that ecosystem. We have more earnings to bring you. Rocket Lab results are out as well, and it looks like loss per share of 10 cents per share, which is in line with estimates. Revenues coming in a bit light, $59.9 million. In terms of the first quarter of 2024 outlook, revenue of $92 to $98 million. Also looks like that's a bit lighter than the $98.6 million street estimates right now. Space Systems revenue for the current quarter expected to be between 60 and 65 million. Launch services between 32 and 33 million, with GAAP gross margins between 24 and 26%. Peter Beck, the CEO and founder of Rocket Lab, saying in this report that they had another strong year, pointing to the return to flight for the Electron rocket. That revenue grew 16% year on year, while they expanded their GAAP and non-GAAP gross margins. Just taking a look, there was also a simultaneous release for Rocket Lab in which it has unveiled a family of advanced spacecraft. So basically, this is part of their space systems business. They're introducing spacecraft buses. So these are key to making satellites, for example, and consolidating the custom designs that they've made for different customers and missions over the air. And so this has been 4 years, apparently, in development. You can take a look at shares of Rocket Lab right now. They're down about 7% as investors digest the results and this announcement as well. I would also just shift gears to another name that is well known on overtime in the space industry. That's Virgin Galactic. That stock is much smaller these days. But if you look at Virgin Galactic, the loss there was 26 cents per share, better than estimates. Revenues missed slightly, but updates on their next Delta-class spaceship and the factory that is rolling out to develop it. Also, it looks like space flight in Q2. So shares of that name are lower as well.
All right. Well, much closer to Earth and the things that grow out of it. Beyond Meat earnings are out. Kate Rogers has those numbers. Boy, that stock is way up, Kate.
John, that stock is absolutely flying. It was up by as much as 40% here on its Q4 earnings. The company reporting a GAAP loss of $2.40. We are not comparing that number. Revenues coming in better than expected for the quarter, $73.7 million versus estimates of $66.7 million. The company giving some guidance here, and I believe that's why the stock is up by about 35%. It sees gross margin to be in the mid to high teens range, rather, for the full year 2024. That is better than that metric has been in some time. It also is giving guidance here, full year revenues of between 315 to 345 million. That is somewhere within the range of estimates of 300. $144 million. Remember, the company announced last week it was retooling the ingredients for its Beyond Retail burger that's sold in supermarkets. We spoke with CEO Ethan Brown. He was very optimistic on this new product and what it might mean for the category. So we will see what they say on the earnings call. Back over to you.
All right. Big move there. Thanks, Kate Rogers. Boston Beer earnings are out. Bertha Coombs has those numbers. Bertha.
Boston Beer missing on both the top and the bottom line. Morgan reporting a loss of $1.49 per share. The street had been looking for a loss of 25 cents. Revenues, $394 million. The street had been looking for nearly $414 million. The company did say that shipments were down 12.12%. That's 3.5% more year over year. While gross margins did go up by 60 basis points to 37.6% thanks to price increases. They continue to have problems with their seltzer contract, or they're not producing as much, not selling as much. And for the full year, the company is also giving guidance of 7 to 11 cents a share for earnings per share. The street had been looking for above $11 per share. As you can see, stock there down about 5.4%. Back over to you.
All right, Bertha Coombs, thank you. Klarna unveiling a new AI assistant that it says can do the job of 700 full-time human agents. Up next, the company's CEO on whether that could lead to layoffs.
Okay, I'm back here. With the analysis from the market. So let's see. I hope you guys can hear me well. So we are take all this. Oops. So I start a short position over here at 146.60. Right now I'm losing 2% because it's up. So I don't know. It's not working properly. I played First Solar before. I think I'm gonna have to have a patience on that one. Right now at 2% doesn't look too good. Pretty much I have to wait tomorrow with the Fed minute to see what's happening with that. Because at this point, 1.9%, with the Dow Jones is down 96 points. SP 500 just shine off 8 points, and Nasdaq has shine at 37 points lately. Just like this is nothing. So let's see the hot ones. Or Rivian, $11. 85. 86 bars. 281. Have all this. Mata 30. Mata's tomorrow. Big earnings from Mata tomorrow. They're probably gonna be a way profit. So okay, guys. Pretty much is for me in closing bell. Nothing exciting happened with First Solar. was not a big movement, which is probably just gonna kill my play tomorrow. 2%. It's not good. Everything points for a short position. It's hard to wait until tomorrow to see what's happening. Other than that, thank you for watching this channel. Always subscribe. I was trying to do before the closing bell the whole analysis on the First Solar, but I couldn't do it. Anyway, as you can see it, a big formation on the neck. It was a short position. That way it was like a support, or we're gonna see the resistance try to push down on a weekly basis and might go down to $87. We'll see. Looks like the earnings is pretty good. The guidance, it could be good. That's the only reason I see this stock moving up right now. Other than that, thanks for watching.